Hi, everyone. I want to start off with the euro yesterday. If you watched the video when we were trading, I don't know, about 1790 yesterday morning, it was my call that I thought there was another low coming in euro and that it would be verified by taking out 117.50, which if you look at it right here, that happened in the last hour after some news that we got that was actually weak retail sales, I believe it was, and yet the dollar is rallying on this. It's my contention that we're going to take out the lows under 117 and between 1680, 1650, I think could be a target and also a reverse out. And I'll be looking to get long the euro down there. It also ties in where I said I didn't think the double top that we had in the dollar index here and here was going to hold and that they were going to squeeze the shorts and take them out. That looks like it could be a layup from here, although, you know, everything and anything can happen in the markets. But this is exactly the forecast that I saw happening. I'll be looking for shorts. Maybe we could get all the way up to 93.5 in the coming days. And I think that would set up some type of high for a correction that could take us all the way back towards 91.5 or so. So that's my view on the dollar. Cable actually is acting even weaker than euro. It's going to be interesting to see. It looks like it's probably likely that we're going to challenge its 136 level. It'd be very constructive if euro was at 116.80 or so and the pound holds its low at 136. We'll see. And with this happening, euro pound is having a nice little move, you know. And euro pound, we did get a throw under and then it negated it. It's acting okay. Perhaps this is a long awaited turn in euro pound and we just had to clean out the stubborn bulls under the April low that we had at 84.70. So euro pound is saying that your preferred short right now should still be cable and preferred long euro. What's going to be interesting is I'd like to see euro make a new low and then take out this low that we had around the 117 level right here, and euro pound not take out the low. That would be a market message to me, and that's why I not only trade euro pound, but I monitor it for my preferred shorts. That would be an interesting tell. So keep an eye on that. Also yesterday, I felt that if the dollar could rally, that maybe we get a bear market rally in the yen. I'm a willing seller up around the 110 level if that happens. And still looking for one more shot down in the yen, US dollar yen towards the 107 level, which maybe you can see a little better on the daily. I'll be looking at this 200-day moving average in the days ahead, around 107.60 or so. Canada on a strong dollar is higher, but this could end up being, once the dollar makes a new high, nice shorting opportunity for one more break towards 23 for longer term buys. And yesterday I did point out that the oil held right where it had to. And this is something that, let's talk about this, where you take a position, say, for example, buying the crude here because you think that this triangle is going to hold and we're going to head higher. And instead of just liquidating your long position under 65.40, it's a reverse out, where if the market fails from here and you're long, say you're long one contract, you have a 2-lot stop where it would flip you from being long to short, because under 65, there's quite a ways to fall, at least towards the 59.60 dollar level. So we'll see what happens. I was impressed how it held yesterday, but you know, everything came back. And let's talk about how everything came back by looking at NASDAQ, because there's a little lesson that could be learned here too. If you look at what's happened, what the candle that we had yesterday, this candle, where, you know, we were sharply lower, came back and closed near the high of the day. Candlestick traders would call that a hanging man. And that also occurred in the DAX. So we did hold some very important support in NASDAQ yesterday. right here at this 14.9 level. NASDAQ could still end up holding and try and blow one more time, but I would say under the Afghanistan Kabul low, which is what happened, we had that sell-off on the images and the tragedy in Afghanistan, and how many people are in danger with the Taliban taking over the whole country right now. So now we know something about the S&P and all Boris's equity markets at Monday's low. Should we take it out? You can see the NASDAQ is coming back already. Should we take out this low, you have a correction underway. It's the same scenario in S&Ps. The S&Ps, look at how it's holding this 50-day on the 4-hour, that underneath yesterday's low, which was 44.38. You have a problem. To me, it looks like there's still a possibility with the dollar we could get one more high in S&Ps and maybe one more high in the NASDAQ as well. If you just tack on yesterday's range, it was a 200-point range on top of yesterday's high, would give you 15,350, which is a Fibonacci target up there. Would take you to this dotted line, wedge line up above the market up here at 15,350. But again, NASDAQ, just like S&Ps, under yesterday's low, a correction is underway. And then I think we head back towards a throwover line. Taking a look at Aussie, making new lows here. Probably some more left. Aussie might be a decent candidate for a buy, but I think 72 looks pretty viable in here. I believe there is a central bank meeting in New Zealand today, and I think they have a lockdown with only one case of COVID there. And here again, it's a dollar. As I said, I'm looking for people who got too bared up on the dollar on Friday's consumer confidence number, that they're going to be squeezed with stops over the 93.19 level. Gold's really fighting its way back. I'm surprised it did this much. I'm going to declare this at least a low now. We could have a little more upside left, but I'll be looking at pullbacks maybe around the 1740 level. The gold silver ratio still favors gold as your preferred long, silver your preferred short. And what a difference in the charts with gold. Look at the gold right here and its recovery compared to silver, much weaker. So once gold tops and we have a pullback of $50 or so, it's going to be very possible that we get some type of retest in the silver. I'll be interested in seeing should and if and when gold trades back towards 17.5 or so, where silver will be. This is something I was talking about for a long time, and this is kind of a commentary on the global economy, especially China, and it's a copper market. And I first brought this up right up here, that it could be a potential right shoulder in copper, and we're right here at the neckline. So copper looking pretty heavy to me. That's a pretty big formation. Let's call it 390 and 480. So let's call it a buck. So the measured move under here is going to take it back down towards about 320 or so. Let's see what it looks like on the weekly. Maybe there's some moving averages there, but copper was really on fire before the spring this year when things started to slow down again. So anyway, that's a pretty ominous looking formation. I wouldn't be long copper or Freeport, McMoran, any of those. And something somewhat interesting in here in the VIX. The VIX never filled the gap from yesterday. See this? So we gapped up yesterday and came back here and did not fill the gap. And we're at some pretty important resistance here. I still, even if we do get a new high in the S&Ps and NASDAQ comes back one more time, I don't think it's a smart idea to be shorting volatility when we could be at an important juncture in risk. So just a quick look at some of the interest rate contracts. So bonds are negative today. That's a TLT. And the 10-year is trying to bounce, but not with much conviction. There could be a bounce still, maybe back up to here if I get that rally in the end to above 110. But then I think there's going to be another shoe to drop on rates. We'll have to see how that shapes up. I just want to take a look at a few of the equities in the FANG. And, you know, as I said yesterday, I really believe this is the key to the whole market. And this is Apple made a new high yesterday. But I'm looking at this as a rising wedge 3-drive formation. We're not at the top of this formation, could come in around 155-ish. That's another $4 from here. But if we should start trading after that happens back under 140, because of the market capitalization of Apple, it's really going to put a big damper on the market. And I think it's going to be a signal of the correction is underway, because look at how NASDAQ 100, which recently made a new high, has survived the weakness in Amazon. And, you know, Amazon used to be the, you know, preferred long for everyone. I mean, before Bezos went into space, Amazon has been showing leadership during the pandemic and even prior. And even with this kind of weakness in Amazon, you still had the NASDAQ making all-time highs. So I really think a lot of it is going to be what happens with Apple, also what happens with Microsoft. So Microsoft made a new high. We are diverging. Look at the difference in the RSI from here on the 4-hour to here. It's pretty glaring. And on the daily, a little bit over 70, so there could be more left, but compared to where the RSI was here, we have our second lower high in RSI. So be careful. Maybe there's one more hurrah left in this market. I still think that we're setting up for what could be a pretty severe and sharp correction to the downside in equities. And, you know, it takes time to turn around a battleship, but all of these formations, here's another rising wedge right here in Microsoft. Google, which has been one of the better acting players, maybe it's got another high left in it. Netflix is so far away from the high. And Facebook has, you know, left an island top. Maybe we could get a third drive to a top there. But for right now, I'm pretty content with the forecasts and the directions that I've given in currencies, and also in the dollar index. So it shouldn't be a surprise to you if you're following me that the dollar is responding to the upside. I want to invite everyone who's hearing this broadcast, this live stream on YouTube, to join us in our platform and bring your charts and bring your questions. You could come in while I'm doing these live stream broadcasts and ask me questions about my analysis. And perhaps if you have a question about a market, you could post a chart, put the link up, and we'll discuss it. And, you know, this is a place for you to come and ask so-called quote unquote expert for his views, and also a great place to learn from some very good traders that we have here that are contributing at TradeGate Hub. So as I end every broadcast, I end it the same way, because I know we're out there looking for pips, but don't just count your pips, count your blessings. It's our mission to build up and edify traders every day. And I hope that these broadcasts are adding value to what you're trying to accomplish in a very difficult endeavor. I'll see everyone tomorrow. Good turnaround Tuesday to everyone, and adios.